a great opportunity. And now let's go to SCNS, which will be the last symbol to review. This is going to be a long one, so guys, hold on tight to your calzoncillos and your panties and your furs, because here we go. Senseonics! What the heck is happening, David? This is the David Show. It's not the Green Tom Show. It's not my favorite show. It is my favorite. It is my favorite show because it is my show. Yes, ladies and gentlemen, we do the videos live without editing. And don't forget to like, share, and subscribe. I don't mind. It is not my favorite show because it really is my favorite show. Motherfuckers. Senseonics, a potential multi-bagger from here. Summary. Senseonics shares have suddenly plunged on no news from recent highs, giving investors a good opportunity to buy into one of the most compelling growth stories in the market. The company aims to disrupt the CGM market in partnership with Ascensia Diabetes Care, one of the top diabetes companies in the world. Senseonics has the makings of a potential multi-bagger from here, and aggressive investors will be advised to initiate a position at the current levels. It has been said many times that the opportunity doesn't come knocking twice. I beg to differ, as Mr. Market is giving us investors a second chance to buy into one of the most compelling growth stories in the marketplace. That company is Senseonics, S-E-N-S. The stock price of this company has swiftly dropped from a top of $5.56, which was our target, just a few weeks ago, to a low of $1.90, a 66% retracement from highs, before recovering from the $2.50s, $3 level. The sell-off happened on no news, simply as investors routed out of high flyers into cyclicals and other reopening stocks. As many times happens, the market lumps everything together and dumps the baby with the bathwater. At first sight, the company has the makings of a meme stunk or plainly a garbage stock. It was trading as low as 0.4 just 3 months ago, before multiplying more than 10x in just 2 months. Besides, it had only 4.9 in revenue last year, a drop of 80% in revenues from the year before. Normally, after reading these two data points, I will stop researching any company. But there is more than meets the eye to this story, so hang on to your calzoncillos and your panties and your furs. The situation for Senseonics was not always like that. The company has been public since 2015 and has traded above the current levels most of that time, and it is not newly founded company. Senseonics was founded in 1996 and has invested all this time developing their technology and getting patents and authorizations. It has 519 issued patents and pending patent applications related to their CGM system. It has burned through $648 million since its inception just to get to where we are now. So what happened, and who is Senseonics, David? Senseonics Holding is a medical technology company that develops and manufactures a unique implantable continuous glucose monitoring. Its products include Eversense and Eversense XL, which are implantable CGM systems to measure glucose levels in people with diabetes for a period of up to 90 and 180 days. The Eversense 90 days has FDA approval since 2018, and the Eversense XL 180 days is already approved in Europe, and FDA approval is expected by the end of the third quarter. A CGM system provides glucose measurements regularly and gives the user an alarm when sugar levels drop too low or go too high. It can also be used in connection with an insulin pump to automatically deliver insulin when needed. Eversense technology is unique as it is a long-term CGM system that can last up to 180 days versus 7 to 14 days from the competition. Here we go, guys. See that? This is a major data point that we just gotta keep in our pocket, okay? And it is the only implantable under the skin and works with a removable transmitter. In competing products, you cannot remove the transmitter, otherwise you have to replace the whole device. It is a CGM system that allows for freedom of movement, and the user can decide when to use it, and all this with even better accuracy than all other CGM system in the market. The almost demise of Senseonics in 2020 was due to some self-inflicted errors and bad luck. The company tried to commercialize Eversense on its own in the USA, and that consumed much of its economic resources without much success. And then, when COVID hit, the company stopped commercializing Eversense as it couldn't get physicians to perform the sensor implant procedure. In March 2020, Senseonics was forced to make a $48.5 million repayment to one of its lenders that panicked and that pushed the company into the limits of insolvency and forced it to look for a partner or outright sell. Oh shit! Oh shit! Enter Essentia Diabetes. On August 10th, 2020, the company announced a strategic collaboration with Essentia Diabetes Care. This is a transformational alliance for Senseonics, as Essentia is a dedicated diabetes company with the presence of 125 countries and 10 million customers. It has the trust and reliability of being in this business for over 70 years. Essentia is in the market leader in the blood glucose monitoring market with its Contour portfolio of devices, and it is the combination of several important companies with interests in the diabetes market. Well, Essentia is based on Switzerland, and it was established in 2016 through the acquisition of Bayer Diabetes Care by PHC Holdings, formerly known as Panasonic Healthcare Holdings, which is a KKR portfolio company. Essentia Diabetes Care is betting big on Senseonics. Not only are they providing $35 million in convertible debt financing, but will also invest an approximate $250 million over the next 5 years to commercialize and market Eversense in exclusivity all over the world. Roar! So why would such a company with approximately $1 billion in annual sales is interested in a $4 million revenue company? I believe Essentia recognizes the enormous potential of this technology, which could eventually make redundant even their current business. Essentia business is Contour, a razor blade business model in which the company sells blood glucose measuring devices for a low price and makes money selling the small lancets that are replaceable. Make a tour through Amazon or simply Google blood glucose monitoring, and you will find that this market is oversaturated with dozens of suppliers competing in price. Essentia prices its wares at a premium over competitors, but the technology is mature, so I am not so sure if new diabetes clients will be choosing Contour to going forward. Basically, they need a new product that can reinvigorate the brand and put them once again at the leading edge of diabetes market. Currently, the Senseonics Eversense device requires calibration twice a day that could be done using a Contour device to measure the glucose level and input the results in the Eversense device via an iPhone or Android phone. But as the following slide shows, the company has a product pipeline with next generation devices that will require increasingly less calibration. The Eversense XL submitted for approval to the FDA requires only one calibration a day, and the Eversense 365 will require only one rebalancing a week, reducing considerably the use of lancets for blood monitoring systems. Product pipeline, as you can see, 2021, Eversense 180, Gen 1 sensor with advanced chemistry. 2023, Eversense 365, Gen 2 roam sensor. So it gives real-time CGM with alerts, with transmitter, with optional FGM point-in-time reading. Interesting. And then 2024, Freedom System, Roam 2 sensor with battery. Real-time CGM with alerts, with optional FGM, standalone FGM non-adjunctive non-transmitter. Interesting. So guys, something to keep an eye. So it seems like Senseonics is not done yet, okay? So they have a timeline. The technology has huge potential to disrupt the current CGM market, which is a $5+ billion market today, growing at about a 35% CAGR. By the way, don't say this in Spanish. People will laugh at you, okay? Don't be going, hey, honey, do you hear about the CAGR? According to Sens management, and dominated by three large companies, Dexcom, Abbott Labs, and Medtronic. Medtronic. This market is exclusively focused on the type 1 and type 2 diabetes patients, which are intensively managed. That means they need insulin shots, and many even use insulin pumps as they cannot produce any insulin themselves. The number of people with diagnosed diabetes in the USA in 2020 was 34.2, of which 1.6 million have type 1 diabetes. Unfortunately, the number of people with diabetes is growing very rapidly, as can be seen from this National Diabetes Statistics Report 2020. As you can see, it has been increasing a lot, okay, guys? You can check out this article on Seeking Alpha. The market opportunity, guys, here we go. And we're almost done. The market opportunity. This is what we want to know. With FDA approval for the Sense XL expected by the end of the third quarter, Senseonics will start to eat at the market share of the incumbent companies in the industry. But the real game changer will come with the Sense 365, as it will open up the Type 2 market to this new type of CGM devices. Here, the opportunity is really huge, and they face no competition, and none is expected anytime soon either. Currently, people with type 2 diabetes have only BGM devices like Contour to help them monitor their blood levels, but that requires pricking a finger to get blood and only provides a measurement at that particular moment. The 365 device will require only a 5-minute intervention every year to remove and replace the sensor, and if the company gets to the point that will need a transmitter as you scan your smartphone over the sensor, then I believe the sky is the limit for Senseonics, as there are 420 million people with diabetes in the world. I think that should be fine, right? The company is providing the current guidance as to future revenues. I believe these numbers to be conservative once the Sense XL gets approval in the USA. I am confident it will be approved. It has already been approved in Europe, and the 90-day device was unanimously approved in 2018 by the FDA's Clinical Chemistry and Clinical Toxicology Devices panel of independent medical experts that voted 8-0 that the system not only was safe and effective, but also that its benefits outweigh the risks. By the way, you can see the targets for earnings for our friends. So 2021, 12-15, 2022, 30-40, 2023, 60-75, 100 and 120 for 2024, and 2025 to 150 to 200 million dollars. Besides, Essentia is already working very fast to get the Sense XL moving in Europe. Despite just getting started a few weeks ago, I checked the German webpage of Essentia, and they have already signed up hundreds of Sense centrums where patients can get the procedure done. Financials and valuations. As you can expect, the financials of Senseonics are nothing to write home about, since they have NOL carry-forwards of $515.24 million. The highlight is that the company has $187 million cash, which they expect will be enough to get them to break even a few years from now and finance their R&D pipeline. So in theory, we should not expect additional capital raises, but I do expect and support an additional capital raise once the Sense XL gets approved, in order to pay down some convertible notes overhanging shareholders in the company, which could be highly dilutive if converted into common shares, as they could increase outstanding shares by 110 million. The most important are 36.3 million principal PHC note, 9.5% 2024 convertible at 0.54 per share. 57.7 million 2025 notes, 5.25% or 5,025. Well, how do you say this? 5.25. Chewy, can you let us know how do you mention this? Roar. Okay, Chewy, your voice is a little bit strange. As you can see, guys, currently there are 377 million shares outstanding for a market cap of around 1.1 billion at $3 a share. Trying to use a traditional valuation method like P/E ratio is futile in this case, so the best comparison will be the current valuation of Dexcom, which is the only pure CGM diabetes company from the three market leaders. Dexcom has TTM revenue of $1.9 billion and a market cap of $35 billion. I believe that if Senseonics can deliver on its promises, it might surpass Dexcom 5 years from now. A few years ago, I encountered the same situation with that struggling small cap company that had burned through hundreds of millions to develop their breakthrough technology. It was on the brink of going bankrupt, but a successful funding round put them back in the game, just when the market was ready for its product. The company was Enphase Energy. Oh my goodness. So guys, if Enphase Energy went well, it went from 0.7 trading it went from trading at 0.7 in 2017 to become the market leader in microinverters for the solar industry and trading at around $160 today. Yep, I did not get involved in Enphase at that time. I feared the worst for the company, but I did get in later. Senseonics evolution reminds of Enphase Energy back in 2017. Conclusion. Finally, ladies and gentlemen, Senseonics is a high-risk, high-reward type of investment, but the type of risk I like. Basically, there is a small chance that the company will file for insolvency anytime soon. And with the Essentia Alliance, it stands at a very good shot at disrupting the diabetes market. In my opinion, Senseonics has the making of a potential multi-bagger from here, and aggressive investors will be advised to initiate a position at the current levels. Next catalyst for the company will be information of progress in the commercialization in Europe and from April 1st in the USA. Then it will be the Eversense XL approval by the end of September. So guys, you already know, will Eversense keep on going higher? Let me know in the chat room. Let me know in the comment section. Let's go ahead and check out SENS right now. Senseonics Holdings. Ooh, David, what is that? We're making profit. We're making profit. David, what is that? It is Senseonics. It can definitely go up. David, what is that? Guys, SENS, let me stop being a little bit annoying, okay? Let me just get this target out of the way, okay? We got different targets for SENS. We've been covering SENS for quite a while already. We broke the motherfucking trend line, okay, guys? That's a beautiful thing. $3.23, starting to become a little bit bullish for Senseonics. If we break the resistance of $3.38, we're going to go up to $5.54. So this is one of the best analysis that we have read over here in this channel. Senseonics Holdings, by the way, written by Federico Cuneo. And ladies and gentlemen, $3.24 is the current price. It can go to $5.54. I wouldn't mind a retracement back to 190s. I definitely wouldn't mind that at all, because I do think that Senseonics will continue to the upside, guys. There's a lot of potential in this one. If you look at the monthly over here, guys, let me remove this target that I'm looking for. The previous month created a higher high from the previous month, went higher than ever. It has never been to $5.56, okay? The candle that it created for this month, it already has gone down to 187, right now 319. The candle, the monthly candle, may close bullish. I think that there is a likely scenario that it can happen. Any retracement from Senseonics, by the way, like I said, could be a great opportunity to create a higher low. So let me know, guys, do you think that Senseonics will retrace back down to 190s? Because if that is the case, I'm not gonna even think about it, especially considering the competition over here. They said the competition is DXCM. So guys, let's review DXCM real quick and let's go back to Senseonics. So Dexcom is at $355, okay? $355, okay? And it looks like it can still continue with the upside. Let me be very honest. If it goes back down to 307 or 230s, it will be fine. I wouldn't even mind that from Dexcom. But the important thing from this is that you can understand that it is at $355, okay? If I go back to Senseonics and we say 355, you're going to say, David, you're nuts. 355, that's not going to happen, David. Well, you know what? Let me go ahead and add DXCM price. And I can say March 15, 2021. So I can go ahead and have at least some documentation of where price was, 355 today. So you have a perspective of what Senseonics can actually do, guys. Look at this. Okay? I'm not saying that it will go there. I'm saying that there's opportunities. And Snuff One Up said $300, okay? Snuff One Up said $300. And this can go back down to $3. Well, $3. So let's leave it there. That's how much is this? A 98. No, come on, man. Espérate. Let me do this right, guys. So today we are at 317, right? Let's add the range, 317, and let me go ahead and add the second target, which is 355. Okay, that's an 11,000% move. Okay, guys, 11,000%. So just imagine Senseonics, 11,000%. Okay, that is an opportunity in the making. I'm not making this up. I'm just reviewing DXCM to compare, right? And it looks like it can get there, but patience will be definitely required on this one. We already reviewed that on September. Maybe we'll get the FDA approval for the Excel. What was the name? I think it's called Eversense Excel. Okay, so Eversense Excel. So guys, I really wanna hear you out. What do you think? By the way, another thing that I do like about Senseonics, the exponential moving average is starting to cross the 14 and the 200. I want to see the 50 crossing, even better, right? And looking at the monthly here, guys, I will definitely enjoy if that monthly candle will close bullish. Keep that in mind, my friends. Keep that in mind. Definitely something to keep watching. I want to see the evolution of Senseonics. Let me know in the chat room. Let me know in the comment section. What do you think about Senseonics? Will SENS go to $5? Will it go to $8? Will it go to $10? Will it go to 13? Will it go to 20? 21, 25? Will it go to 300? I don't know. Let me know in the chat room. If you're a member, if you believe this can go up, doing a beautiful, give me a rocket. If you believe it's gonna go down, give me a SpongeBob Bobbers and give me your opinion. That is it. That is it for Senseonics, guys. Very excited to see what it will happen next. Let me know, guys. I love Sens, biggest investment in the portfolio. Beautiful, beautiful. Look at that. That's what Late Night Retro has said.
Oh, yeah!
And Fat Nut said, this is the David Show. It's not the Green Tom Show. And of course, this is my favorite show. Good morning, community. Wow, what a beautiful rhyme, my friend. This is the video for today.
I'm Batman.
Thank you, Batman, for making an appearance. Don't forget to like, share, and subscribe. Ring the bell, members. Ask me questions in our Discord. I will definitely keep an eye on it. SENS, guys, very excited to see what it will do next. It's one of my biggest positions as well. Definitely gonna keep an eye on it. And guys, that is it. Thank you all for being here. We do the videos con mucho, mucho amor. Don't forget to like, share, and subscribe. Ring the motherfucking bell. The videos are for entertainment and learning purposes. And as always, have a beautiful morning.
Hadouken! Monster kill.